going over a sell trade. We've had lots of buy side trades, but this is going to be a sell trade, and we're going to be breaking down how to form a supply area and how to trade a supply area. So this was probably the best trade of the week. This was on Monday, the 14th of April. So as we can see, we had a key level to trade from. We were above the 10 a.m. Eastern. And the most important thing we're going to be going over is the price action over here, right? So trading itself is very, very simple. I often say to students that it is shockingly simple, but very difficult, right? So I will explain to you in 30 seconds how this strategy actually works. And it all comes down to using the basics of supply areas, right? So when we have a supply area like this, right, what does a supply area actually mean, right? So a supply area is essentially an area where you want to be selling from. So this is going to be our supply area. So the point of a supply area is that buyers have to fail, right? This is the most important thing, and we're going to be discussing this right now, right? So when price comes into a level, we often see a lot of aggressive buyers coming into this area. This is important to understand. Now, when we have a lot of aggressive buyers, what that typically means is that the ask volume is very strong. So if I take you over to the ATAS platform, this is where we kind of dissect a few things, right? So we're going to be understanding this in terms of the buyers and the sellers. So I often get questions about which platform this is, right? So this is an important platform because I was having some conversations today, right? How do you know which rejection to take? What's an A plus rejection versus a C plus rejection, right? You don't really know, but you can use some of the candles to your advantage, right? So as we come into this area, we can see the fact that we had a green candle or a bullish candle, which was supported by aggressive buyers. The reason we can see aggressive buyers over here is because we've come into the ICT fair value gap. And inside of the fair value gap, we see some blue delta in particular. So I'm not reading every number. I'm only reading certain numbers which stand out to me. So here we see 153 for 255. Here we see 19 for 106. So if we focus on the 19 for 106, right? 106 is a lot larger than 19, probably by a factor of, I think, five or six. So really what's happening is a significant ask volume. So the number on the right is the ask. So if the ask is greater than the bid, that means that there's more aggressive buyers than there are aggressive sellers, right? Same thing over here. This is what's super interesting. Even though we had a red candle, this is the candle itself, a red candle. We saw a wick. A lot of people refer to wicks, but have no idea how to read them. Now, when you read wicks like this in particular, what's happening is you can see some buying activity over here. Why is it buying activity? There's more aggressive buyers and sellers because the bid is more than the ask. So we have a positive delta. It's important to understand it. So when we have a positive delta, but the market moves downwards, we had a large seller step in over here. What that's telling you is that buyers are reacting to this level, but they're not being rewarded. So this is why we use the ATAS platform, right? So when we come into a supply area, we're actually seeing what's going on over here. This is important to understand. So when we go back to our candlestick chart, let's just kind of break things down, right? So if we replay price back to this area, we had market open over here. This is now going to be 10 a.m., right? So we come into 10 a.m. 10 a.m. Eastern, we had a large move to the upside, and we also had a rejection over here. Now, one thing I often like to do with my levels personally is I always like to trade the second tap when the body enters the area. So what that means is that we had this wick over here. This was only a wick. Therefore, I'm not looking to trade just yet, right? I want to see some confirmation, right? So what do they mean by confirmation, right? So confirmation is a fancy word for people who don't know how to use it, right? So when we go back to our supply area over here, what you're really looking for, what you really want to see is you want to see price really try and break this area, great, and then we enter upon the retest. So essentially it is a break and retest strategy, but the problem is traders use break and retest, EMAs, fair value gaps, breakers, market structure shifts, PD arrays. They use lots of different ICT concepts, but they don't know what's going on in the three circled regions, right? So 1, 2, 3. So if we break this down, what's really happening over here is we're seeing aggressive buyers fail, right? So over here, we're seeing a lot of positive delta, right? So if I label this as positive delta, so the positive delta simply means that the ask is bigger than the bid, right? A lot bigger. So the ask is bigger than the bid. So you want to imagine this as an auction between buyers and sellers, right? So what's really going on over here is we see a ton of buyers. Now, buyers are trying to drive price up. But if they fail to drive price up at this level, this means that the supply area is strong. It is a confirmed supply. Now, from here, if price came into this level, and it broke the level, then this would be a demand area. So a key level or a fair value gap can be a supply or demand. It's your job to read and actually figure out what was going on. So when we go back over here, right, the way I was looking at current price action is number one, when price comes back into this area, this is the entry model. We're going to break the entry model down, right? So the entry model is this is the 10 a.m. Eastern, right? So we are above the 10 a.m. Eastern. That's tick number one, right? So tick. We're also in a 15-minute fair value gap, and we've also mitigated this 5-minute fair value gap over here, right? So price has come into a refined 5-minute fair value gap, right? That's another extra tick over here. So tick, tick, tick. Now the final tick we're really looking for, if we just head down to the 1-minute time frame, right? So the 1-minute time frame is where the shift comes from, right? This is what we use to confirm our shift, right? So we can see the level has held, right? We see the level is held and we've broken with the body, right? So this is what's important to understand. Now that we come into a refined 1-minute fair value gap, this is now our 1-minute fair value gap, all the way resting over here, right? So price has filled a 5-minute fair value gap, a 15-minute fair value gap, and on the 1-minute fair value gap, we're looking for order flow. So order flow in itself is where price comes up and it breaks, right? But how do you know when you want to enter over here? Well, you need the ATAS platform. The ATAS platform is what gives you the order flow. So now from here, what we're seeing is we're seeing a second retest into the zone itself. So here price really comes in and tests the zone itself. And notice how we have a without even reading the numbers, we have a very large aggressive buyer stepping in over here. And this is where the delta becomes super powerful when we see a shift of positive delta down to negative delta. So we see such a clear shift and these buyers have failed. We see 233 for 520, significantly more aggressive buyers and sellers, right? But what does the market do? Well, the market breaks to the downside. To give you an extra confirmation, we saw 57 for 211, but the market was moving down. So this is where you need to dissect candles in terms of what they are. Candles are simply a visual, picturesque, representation of the buyers and sellers. When you see aggressive buyers shift to aggressive sellers, and when you see aggressive buyers in a red candle as price moves downwards, this is what gives you the indication that the fair value gap is holding. So when we take this knowledge back to the overall candlestick chart, what we saw over here was super interesting. We saw this fair value gap actually holding in the first place. So we saw a lot of aggressive buyers over here. And this is the reason we can take the trade, right? Because we also saw significant buyers over here, but those buyers failed, right? Those buyers failed, which means the zone is strong for selling. It is a strong supply area. Now from here, we can enter off this area and we can keep our stop loss either above this high if you're conservative, or you can have it at this local high. I prefer to be a little bit conservative with my highs, right? So I go for a lower risk reward. And now from here on the 1-minute time frame, where do we look to enter? Sorry, where do we look to target? So again, liquidity is your next target, right? So simply London low, right? London low would be my kind of full TP target, and that's like a 1 to 2 risk reward, right? So before we actually go on and see how this trade played out, right? This trade obviously played out. We had a bit of squeaky bum time, but the market played out in our overall direction. So you want to ask yourself, what causes the market to move up and down in the first place, right? What causes this down move? This down move can be easily predicted when you use the three following concepts, right? You need to be understanding, you need to be trading at fair value gaps, 15-minute fair value gaps. You then need to use the PO3, right? So the PO3 is very simple. You want to be selling above the 10 a.m. Eastern, right? Now, the third thing is the order flow. I'm just going to write OF for short, right? So the order flow simply refers to the fact that this circled red area represents more aggressive buyers and sellers. And we can see that over here. We can see on this chart, well, let's just bring the two next to each other. We can see, very clearly see order flow shifting from aggressive buying to aggressive. This is what's very important to understand. So whenever you're trading ICT concepts, you need to understand we see a shift from the buyers down to the sellers, right? And that's what we saw over here. So we just move this over to the right. The circled red area represents the shift in buyers down to sellers. So these buyers fail, and then obviously the market heads to the downside. These buyers here also fail. So when you're trading order flow in ICT, you always want to position yourself to trade the candlesticks with the actual price action, Price action is made of buyers and sellers, the bid and the ask, the volume and the delta. The candles are simply a picturesque version of what's happening. So remember, it's order flow that makes candles, not candles that make order flow. So if you want to predict what candles are going to do, i.e. move up or down, you need to know what's happening inside of the candles at key levels. And you're basically reading the interaction and the shifts of delta, the shifts between aggressive buyers and sellers to be profitable.